This module is intended to assist Kentucky employers involved in the trucking industry in understanding how workers' compensation premiums are calculated and what can be done to influence those premiums. It is impossible for a training module of this type to address this topic comprehensively. Although the information contained within this training module addresses general information that all employers should know, it does not address the topic of insurance underwriting in an exhaustive manner. For additional information, you're encouraged to contact your company's independent insurance agent. This module is intended for Kentucky employers that operate one or more commercial motor vehicles and hence are subject to the annual Education and Safety Training Regulation passed into law in 2013. This module is designed to provide trucking companies and other businesses that use commercial motor vehicles in Kentucky with an overview of the workers' compensation premium calculation process. This training module was created for you by Midwestern Insurance Alliance, the workers' compensation carrier endorsed by the Kentucky Motor Transport Association, and the host of the website truckingworkerscomp.com. At the conclusion of this module is a brief quiz. For many companies, including motor carriers, workers' compensation premiums are a major line item in the company's budget. Certainly, it makes sense for the company's accountants to understand how workers' compensation premiums are calculated, but it also makes sense for safety directors and others within the company who have management or supervisory responsibilities to understand it as well. Although there are some exceptions, for the most part, workers' compensation policies are written for a period of 1 year. That period does not necessarily correspond to the calendar year, but can begin and end on any date. However, for accounting purposes, many companies have their workers' compensation policy correspond to the company's fiscal year. In very broad terms, there are 5 components that enter into the determination of a company's workers' compensation premium. They are payroll, classifications, rates, the experience modification factor, and scheduled credits or debits. Let's start with payroll. Workers' compensation premiums are calculated using the company's payroll figures. Given 2 otherwise identical companies, a company with higher payroll costs will have higher workers' compensation insurance premiums. Because the exact payroll for the upcoming policy year is not known, before the premium can be calculated, the employer has to make an educated guess regarding what his company's payroll will be. The goal is for the employer's estimate to be as close as possible to the actual payroll, because at the end of the policy year, the actual payroll will be audited by the insurance company. If the employer underestimated the company's payroll, the insurance premiums would have been calculated too low, and the employer would be faced with paying the insurance company the difference. Conversely, if the employer estimated his payroll too high, all through the year the company would have been paying the insurance company too much and would be due a refund. In the context of workers' compensation premiums, payroll includes hourly or salaried pay, commission or bonuses, holiday and vacation pay, and the value of meals or lodging provided to employees. For the purpose of workers' compensation premiums, overtime pay is included as well, but only at the straight-time rate. First, all employees are grouped according to their business operation. We call that their classification. Roofing contractors are grouped with roofing contractors, churches are grouped with churches, and trucking companies are grouped with trucking companies. In Kentucky, we use the classification system developed by the National Council on Compensation Insurance to classify employers for workers' compensation purposes. In that system, there are 2 classifications for most standard trucking companies, short haul and long haul. Short haul trucking companies are trucking companies that remain within a 200-mile radius. Most other trucking companies fall into the long haul classification. One important principle of workers' compensation classification is that, generally speaking, it's the overall business that's classified, not necessarily particular job functions. The amount charged for each classification is called the manual rate. It's expressed as an amount of money per $100 in payroll. For example, the manual rate for the clerical classification is generally somewhere between 30 and 50 cents per $100 in payroll. The manual rate for each classification is different, and it's higher for hazardous workers' compensation classifications because those companies are more likely to have more frequent and more costly workers' compensation claims. For example, although the manual rate for the clerical classification may be somewhere between 30 and 50 cents per $100 in payroll, the manual rate for a residential roofing contractor could very well be somewhere between $20 and $30 per $100 in payroll. In Kentucky, insurance companies develop their own manual rates, so the manual rate for long-haul trucking, for example, may differ from one insurance company to the next. Although the manual rates differ from one insurance company to the next, these rates are not arbitrary. The rates charged for each classification are based on the historical losses of companies within that classification. If your business is a long-haul trucking company, your rate is not influenced by losses within the roofing industry. Your rate is not even influenced by losses within the short-haul trucking industry. The rate for long-haul trucking companies is only influenced by losses incurred by other long-haul trucking companies. Also, your rates are not affected by losses incurred by trucking companies in California, Illinois, or Massachusetts, or anywhere else in the country. If you're a Kentucky-based company, your rates are only influenced by losses incurred by companies paying premium for their exposure in Kentucky. Workers' compensation premiums are calculated by multiplying the manual rate times each $100 in payroll. For that reason, the manual rate is sometimes referred to as the per hundred rate. All in all, it's a pretty good system. But that's not all there is to determining your workers' compensation premium. If all there was to calculating workers' compensation premiums was to multiply your estimated payroll by the manual rate for your workers' compensation classification, that would be simple. But it would treat all companies within a given classification the same, and not all companies are equal. There are a lot of things that cause companies in the same industry to differ from one another. Although it's probably not the first thing that comes to mind, the truth is that some companies simply have more injuries than others. For that reason, there's a process to account for the differences in claims activity between individual companies within a given classification. That process is called experience rating. Experience rating is the process by which your company's workers' compensation losses are compared with other companies within your same classification. In very general terms, experience rating is a mathematical calculation. It's your company's actual losses divided by its expected losses. Of course, that's an oversimplification, but for the purposes of this training module, that explanation will suffice. The product of experience rating is called the Experience Modification Factor, or Experience Mod for short. In a few minutes, you'll see how the Experience Mod can impact insurance premiums. But before we get into that, I want to mention a few more things about the experience rating process. First, experience rating is not part of the premium calculation for every company. In Kentucky, it's only done for companies that have an average annual premium of at least $5,000. That's because the prior loss history of smaller employers is statistically less reliable. For companies that are experience rated, it's done every year, approximately 6 months before the company's policy renewal date. It doesn't merely look at the company's workers' compensation claims from the previous policy year alone, nor does it look at all of the workers' compensation claims that the company has submitted since it's been in business. Instead, the workers' compensation claims that enter into the experience rating calculation include those that were incurred during the 3 most recent completed policy years. The fact that the experience rating process looks at a full 3 years of claims data can be good or it can be bad. If you have a bad year, a year with one or more costly workers' compensation claims, it's good that 3 full policy years are used, as the 2 good years will lessen the negative impact of the 1 bad year. On the other hand, you're stuck with that bad year impacting your experience modification factor for 3 years. Additionally, your experience rating is calculated by the National Council on Compensation Insurance, or NCCI for short. That's the same organization that developed the workers' compensation classification system discussed earlier. So far, this training module has provided a foundation of knowledge regarding the experience rating process. However, if you'd like additional information, the best source is a 10-page booklet available directly from NCCI called the ABCs of Experience Rating. It can be downloaded for free from ncci.com. However, before we leave the topic of experience rating altogether, let's take a look at how the experience modification factor can impact your company's workers' compensation insurance premiums. Whatever your experience modification factor is calculated to be for a policy period, the manual premium gets multiplied by that factor. If your company has a favorable loss history, your experience modification factor will be less than 1.00, as it is in this example. As you can see in this example, the experience modification factor is 0.75. When that number is multiplied against the manual premium, the overall premium is reduced by 25%. But the reverse can happen too. If your company has an unfavorable loss experience rating will raise your premium, as it did in this example. In this example, 1.25 is the experience modification factor. Multiplied against the manual premium, it increased the overall premium by 25%. Like many states, Kentucky allows insurance companies to use discretionary credits and debits to influence the premium. These are known as scheduled credits and debits. These work similar to the experience modification factor in that they're percentage adjustments to the premium. For example, a 15% credit will reduce the premium by 15%. On the other hand, a 15% debit will increase the premium by 15%. These scheduled credits are filed with the state and are used by the insurance carrier when specific characteristics of a company warrant an adjustment to the premium. For example, an insurance company might apply a 10% credit if a company has exceptional practices relative to employee selection, training, and supervision. On the other hand, an insurance company might apply a 10% debit if there is, for example, some unique characteristic about the operation that makes it more hazardous than the typical company within that classification. The items listed on this page are an example of the scheduled credits that an insurance company might file with the state and consider in the premium determination process. Now let's take a look at how scheduled credits and debits fit into the premium calculation process. In this example, the company is a long-haul trucking company with $1 million in payroll. Based on a manual rate of $13 per hundred, the company has a manual premium of $130,000. This particular company has a favorable loss history, giving them an experience modification of 0.75. When that's multiplied against the manual premium, $32,500 is knocked off of the premium. But there's more. This company has also been given a 15% scheduled credit, which knocks yet another $14,625 off of the premium. The end result in this example is a savings of more than $47,000. As you can see, it's possible to enjoy very significant savings on your workers' compensation premiums if you can control the frequency and severity of workers' compensation claims, and thereby set your company apart as a favorable risk for the insurance company. Injury prevention resources developed specifically for motor carriers can be located on truckingworkerscomp.com, a website maintained by Midwestern Insurance Alliance, the only workers' compensation provider endorsed by the Kentucky Motor Transport Association.